Okay, so hello, Assalamu alaikum students. This is your teacher Aska Bhatt after a long time. So basically, okay. So basically today we are going to start our accounting paper 1 and variant 2. This is basically for Pakistan specifically, but yes, if you want to just do some practice, because maybe you just want to appear in May June session 2024. So in that case, it would be useful for you. Okay. So I have given the solution of this paper on my Facebook page or my Facebook ID, I think. So as you can see that this paper has been solved by me. Okay. So this is the paper 1, variant 2. And this is your latest paper, October, November 2023. And we have 1 hour to complete this paper. As you all guys know that we have 30 questions to solve. So basically, I am going to solve this paper from the very last MCQs. Okay. So first of all, in MCQ number 30, as you can see, that the examiner says that which statement reflects how CVP analysis can help with management decision making. So this CVP analysis is basically your break-even chart. Okay. So there are basically 4 options we have. In first option, examiner says the separating out fixed and variable elements of cost. So we know that in the CVP analysis, we don't suppose to separate the fixed and variable cost of elements. So this is not the option. Number 2, the examiner says that setting short-term prices. So basically, we can use a CVP or break-even chart to set the short-term prices according to our sales or according to our break-even points, break-even sales. So yes, but this is good for the short term. We cannot use this approach for the long-term prices. So that is why B can be the right option for, like, yes, the manager is basically using the CVP analysis for making the short-term prices decisions. C, they are saying the understanding changes in the business environment. So we know that if we want to know the changes between the businesses environment, so CVP cannot help in that, because CVP just this is kind of a thing which help us only in the numerical, you can say the quantitative ways. So if we want to maybe understand the changes in the business environment, so CVP can never help us. So in D option, understanding changes in the product mix. Again, this is the qualitative factors. So again, CVP would not help in this. So B option is the right option. And after that, in MCQ number 29, the examiner says that we have following information about the manufacturing business. So first of all, we have the production for the period, which is 2,400 units. And we have also the closing inventory. And this is the production units, which we, you can say that made this year. Okay. And we have direct material cost and direct labor cost and the factory fixed expenses. So we know that these costs are basically direct cost, but this is your indirect cost. So there was no opening inventory. Okay. Closing inventory is valued using the marginal costing. What is the marginal cost per unit of the finished goods? So we know that we have 2 type of goods here, that these goods basically in process, or you can say that this is the raw material, but these goods are basically the finished products, because we have produced these goods. So it means that this is not the process or the raw materials. Basically, this is the finished goods. Okay, so the examiner saying that to find out the marginal cost per unit. So it means that we have to find the direct cost per unit of the finished goods. So first of all, we have to know that what is our marginal cost means the direct cost. So we know that these two types of costs is related to the direct cost. So we have to add both numbers, 12,000 plus 6,000, and we have to divide it by the 2,400 units because we want to know the marginal cost per unit. So that is why we are dividing it by the 2,400. So after that, we will have the $7.50 per unit direct cost, or you can say the marginal cost. So our option A is the right option, 7.50. Okay. Okay, so in question number 28, which statements about marginal costing are correct? Okay. So in first option, he says contribution is the difference between sales revenue and the total production cost. So we know that in marginal costing, whenever we are trying to find a contribution, so we have to deduct the variable cost from the sales, from the selling price, variable per unit cost minus selling price. So basically, this would give us the contribution. But in this option, this information is right, but this information is not right because here the examiner is talking about the total production cost. Okay. So in option two, costs are classified as variable or fixed cost only. So we know that whenever we are making the profit statement for under the marginal costing, so we know that we don't have any cost to deduct. We have only two type of cost, which is the variable and the fixed cost only. And so it means that two option is right. And in third option, variable costs include variable selling price. So yes, of course, variable cost, because variable selling price means that if you are selling something, so maybe there are some expenses which is occurring on that time when you are selling your product. So that is why it is totally variable, because it is increasing with your sales. These expenses basically increasing with your sales. So that's the reason that whenever some cost or some expenses which may be increasing with the increasing number of output or increasing number of sales, so it means that we can say that these type of expenses or cost would be the variable cost or variable expenses. So it means that option 2 and option 3 is the right option. So it means that D is the right option. Okay. So in this question, a business produces two types of product, P and Q. Okay. For the month of January, overheads are absorbed using the direct labor hours. Okay. So production details are as follows. So for P, we have made 5,000 units and we successfully sold these units. And for Q, it is produced 2,000 and we have sold these units again in January. And we have direct labor hours, which is per unit 1.5 and $1 for the Q product. So direct cost for the month was this, and fixed overheads was this. So what was the overhead absorption rate per hour? So it is very simple. It means that we have to apply the overhead absorption rate formula. So formula is basically budgeted overheads divided by budgeted labor hours, because we have only one base here, which is the direct labor. In some question, examiner would give you the direct labors per unit or maybe the machine hours per unit. So whether maybe if examiner would give us the machine hours and the labor hours for the P, so it means that we have to see that which number of hours is basically greater. Is it for maybe the labor hours are greater than the machine hours, or maybe the machine hours greater than the labor hours? So it means that it is totally depends that your P department is basically the capital intensive or the labor intensive. If it is a labor intensive, so it means that we have to make the base, which is direct labor hours. But if it is capital intensive, so it means that we have to make the base machine hours for finding the overhead absorption rate. So overheads are 6,500. Okay. And we don't need this 235,750 because this is the direct cost. So because formula is that we have to divide the budgeted overheads over the budgeted labor hours for both of the products. Okay, so budgeted overheads for both products are 6,500 and the budgeted labor hours we have to find it. So if we want to find out the budgeted labor hours, so as you can see that we have the labor hours, which is basically per unit. So it means that we have to multiply it by 5,000. So after that, we will have the total labor hours, which may be consumed to make these two products. Okay. So 5,000 is the number of units for P and the labor hour per unit is 1.5. So we have to multiply it. And after that, we have to multiply also 2,000 multiply 1, which is equal to 2,000. And after that, we have to divide it. So lastly, if you have the calculator in your hand, so you can calculate it very, very easily. So we have $0.68 per labor hour for making these products. Okay. So um, in 26 MCQ, what would cause overheads to under absorbed? Okay. So basically, we have overhead, budgeted overhead, because whenever we are finding the overheads, so we have basically the cost, the overheads, which is totally anticipated. It means that this is not the real overheads, but at last, at the year end, examiner or the manager would give us the real absorbed overheads or the real labor hours, the actual labor hours, the actual machinery, and we have to compare those overheads with the actual overhead, and we have to find out that whether we uh, absorb the overhead under, maybe lesser than the actual, or maybe we absorb the overheads greater than the actual. So this is called the overhead over absorbed or under absorbed. So in example one, in option one, overhead absorbed is greater than overhead budgeted. Okay, so it means that if the overhead budgeted is 2,000, okay, but overhead absorbed, it means that this is the actual overhead absorbed. Maybe the actual overhead absorbed greater than the overhead budgeted. So it means that if it is $3,000 and if it is $2,000, so it means that this is the actual and this is the budgeted. So it means that overhead absorbed is greater than the overhead budgeted. Okay. Okay, so this 3,000 is basically because it is greater than the overhead budgeted. Okay, so it means that maybe overhead absorbed is 2,000, which is actual, and it is greater, and this is maybe 1,000. So actual is 2,000, okay, and the budgeted is 1,000. So what does it mean? It means that we somehow over absorb the overheads. And in option B, the examiner is saying that overhead absorbed is less than the overhead budgeted. So what does it mean? That if the budgeted overhead is 1,000, okay, and overhead absorbed is less than the overhead budgeted, so it means that actual may be lesser than this, maybe 500. So it means that we over absorb the overheads. Why? Because budgeted overheads, which we find out this is the $1,000, but actual is 500. So it means that we over absorbed our overheads, over absorbed. But the examiner is asking about the under absorbed. What would cause the under absorbed overheads? So in option C, overhead incurred is greater than the overhead absorbed. Overhead incurred is greater than the overhead absorbed. So this is the right option because your overhead is greater than your overhead absorbed. It means that this is the budgeted and this is the actual. So if it is greater, so it means that somehow you under absorbed your overheads. So option C is the right option. In question number 25, the examiner said that manufacturing business has a service department, which is X, and the production department, which is Y and Z. Department Z is the labor intensive. Okay. So how is the overhead absorption rate set for the department Z? Okay. So it means that we have to find out the overhead absorption rate for the department Z, and department Z is basically your production department. Okay. So we know that whenever we want to find out the overhead absorption rate, so we have to do some task. So as you can see that those tasks is divided into three options. In first task, as you can see, that first of all, apportion total overheads across X, Y, and Z. So we know that whenever we are apportioning the overheads between these departments, so this is the very first task in the absorption costing. And in the second task, we have to reapportion excess overheads to Y and Z, because in second task, basically, we have to reapportion the service department, because X is your service department. So we have to reapportion its overheads into the as a production department. Why? Because this service department is giving the services to these production departments. So it means that whatever the cost is occurring in the service department, it should be reapportioned into the production departments, in production department Y and production department Z. This is basically our second task. And because we want to find out the overhead absorption rate only for department Z, so it means that we have to divide Z's overheads by the budgeted labor hours. Why? Because in this question, examiner says that department Z is a labor intensive. So it means that if it is labor intensive, so we have to divide its overheads by its budgeted labor hours, because this is the labor intensive. If in this example, examiner says that maybe examiner would have said that maybe in this example that department Z is capital intensive, so it means that we have to divide the overheads of Z's department on the um, machine hours. And in option B, he says that apportion total overheads across Y and X, Y, and Z. So this option is right. But in second task, reapportion excess overheads to Y and Z. This is also good. This is also a right option. But in third option, the third task, the examiner says it divides these overheads by the actual labor hour. So we know that we don't need to divide the overheads by the actual labor hours. Yes, but when we try to find out the over or under absorption of overhead, so yes, at only that time we will use the actual labor hours. But before that, if it is the budgeted overhead, so we have to divide the budget overheads on the budgeted labor hours. This is not the right option. So in C, subtracts excess overheads from the total overhead. So this is the wrong task, because in the first task we have to apportion the total overheads between all the departments. So it means that this is the wrong. And in second task, as you can see that a portion remaining overheads across Y and Z. Again, this is wrong because in second task, because first we have to allocate, we have to apportion the total overheads between these departments. And after that, whatever the amount we have in our service department, we have to reapportion it into the Y and Z department. This is a second task. And why we are doing it, I have already discussed this thing with you, that why we are doing this. So second task is also wrong. And in third task, the examiner says to divide these overheads by the budget labor. So this is the right option. But because the first task and the second task is wrong, so we cannot say that this C option is right. So I think I hope you just understood the concept behind this question. So basically, first, second, and third all together, these three task is right in only in option A. So it means that our option A is the right option. Okay, so after that, as you can see that in the question number 24, company has been asked to quote a price for a specific job and estimated cost are as follows. So it means that we get a job, maybe it is making some specific kind of product, and we have some cost for it. The direct material, which is 2000, and direct labor, which is 33,000, 3300, sorry. And overheads are charged at 50% of labor cost. So it means that we have to find out the 50% of labor cost, which is 3300. And the profit is 20% of the total job cost. So it means that whatever the cost of the job, we would apply the 20% profit on it. And after that, we have to quote that price to that job for to our customer, basically. So first of all, we have to find the total cost of it. It means that direct material is also part of your total cost, and overheads is also the part of your total cost. So direct material is $2,000, and this is 3,300, and overheads are just find out the 50% of the 3,300. So it will give you 1650. So it means that it would give you 6950 when you add these three amounts. But we have to apply the profit percentage on it because this is the total cost. But of course, if we are doing some specific jobs, it means that we have to earn some profit on it. So that's the reason that we have to apply this 20% on the job cost. So if you apply this 20% of job cost, so you will get 1390 as the profit figure. So it means that whenever we are giving the quotation to our customer, so we would suggest him, or we would give him the quotation for 8340, which is in which this is our total cost, and this is the amount which we want to earn on this job. So we have to quote 8340 to our customer for this job. Okay, so this is the question number 23, sorry. Business commenced trading on 1st January. Okay, so purchases and the sales of inventory for January were as follows. So as you can see that on January 4, we purchases 3 items, and the price of each item is 200. And on 13 date, we sell 2 items from these 3 items. And 26 we have purchased another 3 items, and on 28 we have again sale 2 items. It means that one from it and two from it, sorry, one from it, because we have sell 2 items. So it means that one from it and one from it. So it means that we have only 2 items behind us. We basically 2 items are maybe laying into our warehouse. So business used the first in first out method of inventory valuation. And what was the gross profit for January? So this is very easy. First of all, just recall the gross profit format. When you used to make the financial statements, so maybe you know that how to find a gross profit. This is basically a very simple format to find a gross profit. First of all, we have to record the sales. So we know that we sold our goods on 13 and on 28, 2 unit on 13 January and 2 unit on 28 January, and $400 for each. So what does it mean? 200 multiply 400, 200 multiply 400, 800 on 800 is equal to 1600. So it means that this is a sale for the January. And after that, we have to record the purchases for this month also. So as you can see, okay. So as you can see that we have purchases on 4th January, which is 3 and 200 each, and on 26th 3, which is 250 each. So we just um have to add these 3 and 3 units, which is 900. But yes, of course, because we have purchased these 3 units for 200, so we have to multiply it by the 200 because we want to write its cost. So 300 multiplied by 200, 300 multiplied by 250, so is equal to 1350. So now we have to find out the closing inventory. So basically we have total number of 6 units, 3 plus 3, okay? And in these 3 plus 3, we have sold total 4 units. So that is why we have to add these 3 plus 3 minus 4 because we have sold it. And because we have sold the goods, which the cost of these units was 200, but now we have the latest units because we are using the FIFO. So it means that whatever may be coming firstly in our warehouse, it means that we have to out the first inventory cost firstly. So that is why we are multiplying it by the 250 because now we have the latest inventory and we have sold that inventory which costed $200, but now we have only the inventory left which is for the $250. So we have to multiply it by the 250. So we have the $500 dollars closing inventory. So 600 plus 1350 minus 500. So we have the cost of goods sold, sorry, purchases and closing inventory is basically the cost of goods sold 850. And if you want to find the GP, which is the gross profit, so we have to deduct the cost of goods sold from the sales. So sales were $1,600 and the cost of goods sold are 850. So now it means that we have 750 in total. So we have 750 as our gross profit. Okay, so in question number 22, as you can see that we have some information. The following information is available for a business at the end of its financial year. So we have credit purchases, credit sales, total purchases, total sales, trade payables, trade receivables. And now examiner is asking about the trade receivable turnover. So we know that we have the total sales, but because we want to find out the trade receivable turnover, so it means that we would not add cash sales into it because in total sales this is 250,000 and credit sale was 220,000. So it means that extra 3,000 will be our cash sales. So, but this is the trade receivable, so we will not add the cash sales in it. So we have the net sales because we don't have any sales return here. So that is why we have the 2020,000 credit sales. We don't need to find the net sales because we don't have any information related to it. So 2,20,000 divided by 8,000. So where this 8,000 came from, basically this is a trade receivable turnover formula in which we have to find out the net trade credit sales, and after that we have to divide this amount on the average accounts receivable. So if we want to find out the average accounts receivable, so what we have to do is we have to divide a $16,000 on the two because we have to find out the average. So by finding on the average, so we have average trade receivable is 8,000. So 27 days is basically our trade receivable turnover. Okay, so here the question number 21. A company has calculated inventory turnover periods for 2 successive years. So year one, our inventory turnover in days was $90 days, and in year two, it is 120 days. So company directors have suggested the following reasons for the change. Before, in year one, it was inventory turnover in days was 90, but now it is 120. So basically, the directors have suggested some reasons for it, that why it has changed. So when it was 90, so two things can happen. Maybe either sales are increasing, so that is why we are um we are maybe ordering the more inventory and we are selling it more. And the other thing can happen also, that our purchases are lower. So that's the reason that maybe our inventory turnover days it was 90. But now as you can see that it is increased by the 30 days. So two things can happen. Either your sales are decreases, so that is why you are not turning your inventory days. You are not, basically you have a very you have pile up inventory in your warehouse. So that is why your days are increasing. Or maybe your purchases are increases. So that's the reason that your inventory turnover days are 120 now. So it means that only these two type of reasons behind the change of the inventory turnover in days. So it means that 2 and 3 is the right option. Okay, so in question number 20, a limited company has a following in its statement of financial position at 31st March. So we have the ordinary share capital and the retained earnings and the share premium. Ordinary shares have a par value of 0.40 each. Okay. So if it means that if you find out the ordinary share in number, so you have to divide this 200,000 on 0.540. But I think this is not a question by the examiner. So a bonus issue is made on the basis of 3 shares for every 8 shares. So it means that this company issued some bonus issue, and it is basis on the 3 shares for every 8 shares. It means that if you are having 8 shares of ordinary shares, so it means that you will get 3 shares of bonus issue. The issue is made so that reserves are kept in their most flexible form. What are the balance on the reserve account after the bonus issue has been made? Okay. So what are the balances on the reserves accounts? Okay. So basically we have to compensate these bonus issue from our reserves accounts. So first of all, we have to know that what is the capital of bonus issue. How can we find out? This is the total share capital. Okay. And the bonus issue is basically uh, the bonus issues capital is including in this amount. So how can we find out? We just multiply it by 3 and divide it by 4, because if you have 8 shares, so you are getting 3 shares of bonus issue. So that is why we are using this thing here. So we have 75,000 bonus issue capital right now. Okay. So this is the 75,000. So first of all, what we have to do is, whenever we want to compensate, so first of all, we have to deduct uh, the 75,000 from the share premium. So the share premium is 80,000 and the bonus issue is 75,000. So 80 minus 75, it means 5K. So it means share premium has only 5K after compensating the bonus issue capital, and retained earning would be same. Retained earning would be same. So it means uh, that in retained earning, 8250 same as before, but share premium is reduced by the $75,000. So which reserves are the revenue reserves? Okay, the reserves which you have earned by the revenue. So journal reserves and retained earnings. Why? Because we have earned these reserves by selling our goods. Because we know that the amount which we have in a general reserve, which is very transferred from the retained earnings into the general reserves. So that is why the general reserve is also revenue and retained earnings is also revenue reserves. But revaluation and share premium account is not the revenue reserve, because the amount which you have getting by the revaluing your asset, your land, or the amount which you have right now in your share premium account, as because you just successfully sold some share of your company, maybe for some premium amount, some extra amount. So it means that this is the type of capital, this is the capital reserves, not the revenue reserve, because you are not getting these amounts from selling your products from your operations. So 1 and 2 is the right option. Okay. So in question number 18, L M N are in the partnership, sharing profit and losses is equal in the ratio of 3 and 2, respectively. For the year ended 31st March, their statement of profits or loss showed a profit for the year which is $68,000. And the following information relates to the partnership for the same period. So we have the interest on loan from L, total for both partners, interest on capital is 2,600, interest charge on the drawings is 1,200, and salaries are $20,000. So now we have to find out that how much of the residual profit will L receive. Okay, so first it means that we have to make the appropriation account, because the residual profit is part of the appropriation account. So first of all, we have to write the profit, which is 68,000, and we have to add interest on drawing, which is $1,200. And after that, we have to deduct the interest on capital and the salary. So after that, we have the residual profit, which is 4,660. But we have to find out the residual profit which L receive. So we know that the proportion of L is 3. So that is why 4,660 multiplied by 3 divided by 5. 5 is basically the sum of the 3 and 2 ratios. So it means 2,796 is basically your part of the residual profit which L will receive. So it's 2,76960. Okay. So after that, we have question number 16. Which entries are made to record interest on capital in partnership accounts? So we know that it would be debited into the appropriation account, and it would credited in current account. So it is very easy. The option B is right. I don't think so that we have to talk about it more. Okay, so after that, the question number 16, the examiner says that business sells some inventory for $80 on credit. The original cost was $50. So how does this affect the statement of financial position? Okay, so we know that if the cost of this inventory was $50, but we successfully sold this inventory for $80, so on credit. So it means that in current assets, our trade receivable will increase by 30. So it means that it will increase by 30. And because you are the owner and you are gaining some extra amount, which is $30, so it means that if owner's capital is increasing, if your profit is increasing, so it means that the equity of the owner is also increasing by $30. So D option is the right option. Okay. So in question number 15, the owner of a trading business prepared draft financial statement for the year ended 31st December. It was then discovered that the following transactions occurring during the year had not been recorded. So these are the transactions. Which transactions will affect both the gross profit for the year and the total value of net assets on the statement of financial position? Okay. Which transaction will affect both the gross profit and total value of net assets on the statement of financial position? Okay. So basically, in option A, as you can see, 1 basically. A check for 500 had been received for commission earned. So we know that this is the part of our other income. So it would affect the gross profit, but it would not affect the statement of financial position. So that's why this is the wrong option. Option 2, cash amounting to 2,900 was received for a sale of goods which had cost $3,000. Okay, so it means that the net book value was 3,000, but cash amounting to 900 was received for a sale of goods which had cost of $3,000. Okay. Okay, so it means that if you are selling the goods because this is the part of your gross profit, and because this was the cost of this was $3,000, but you maybe okay, so cost was $3,000, but you have received 2,900. So it means that it would part of the gross profit, and also because you are losing some amount of sale of these goods, so it means that it would be the part of the, no, 1 second. Yes, of course it would affect the net assets value because its cost was 3,000 and you have received $2,900. So it means that it would affect the net assets. Net assets means that your current assets, non-current asset minus the current assets. So this is basically our current asset. So that is why it would affect the GP and your net assets also. Okay. In option 3, inventory costing 5,000 had been taken from the business by the owner for personal use. So if you are taking out the inventory, so it would affect the gross profit because we have to deduct this 5,000 from the purchases. And also because it would also affect your statement of financial position because this is a drawing. So this is the right option. Number 4, non-current assets with the carrying value of 650 100 had been sold for 7,000. So this is a disposal gain basically. And it would not affect your net assets because it is not, we don't need to record it into the statement of financial position because we have sold this asset. So that is why it would not affect your statement of financial position. Yes, but it would not affect the gross profit either because this is a disposal gain. So that's the reason that it would not affect the gross profit. Okay. So in question number 14, business prepared its statement of profit or loss for the year ended 31st December. During that year, on 30 April, non-current assets had been sold. The following information is available in respect of this item. So the cost of this asset was 130,000, sale proceed is 53500, residual value is this, carrying value is this, and expected life is this. So non-current assets are depreciating using the rate and method with depreciation being charged for each month of ownership. No accounting entries had been made in the respect of this non-current asset for the year. What was the effect of this omission in on the profit for the year? Okay, so basically we have sold this asset. So the net book value of this asset has been written, which is 52500, and we have sale this asset for 53500. So we have to deduct it. So it means that we have earned gain, which is $1,000, and we didn't record this amount in our income statement. So of course, if it is a gain, so it can increase our profit. So if we are not recording it, so what does it mean? Your profit would be understated by the $1,000. Okay, so in question number 13, At a business financial year end, there were expenses owing, expenses prepaid, income owing, and income received in advance. How will the ledger account balances brought down at the start of the new financial year appear in the journal? So we know that if it is expense account, so how can we record it? P O O P, POP account. And uh, if it is income account, so we can make it by APA account, A P P A. Okay, so what does it mean? If your income is accrued, so it would record on the debit side at the year month start. And if it is your prepaid income, so it will record at the year month start on the credit side. And if your expenses are prepaid at the year start, so it will record on the debit side. And if your expenses are owing, so it means that if you have the services from your supplier or maybe someone else, so not supplier basically, for anyone, maybe the water supplier or maybe something else, so it means that it would record on the credit side. So what we have a debit balance. Okay, so examiner says that expense owing would be debit balance. Okay, so as we can see that if expense has debit balance, so it would be prepaid, it is not owing. Income owing, so as you can see that this is also not owing, this is the accrued income. Yes, debit balance is basically income owing actually. In credit balance, expense is prepaid, but as we can see that this is not prepaid, this is owing. Income received in advance, this is the prepaid on the credit balance, but this is not the right option. So we can say that A option is not right. In B option, expenses owing on the debit side, so it is not the case. Income received in advance, this is not the case because it's accrued. We have the person which supposed to give us the income, he didn't give yet, but maybe after some time we have the possession on this amount, so he would give maybe after some time. But at this time, if the balance on the debit side of in the income account, so it means that this is not advance. Prepaid income is advance payment. Expenses prepaid, yes, this is the option, right option. Income owing, this is the right option, but this is not the right option, so it means that we cannot say that B option is the right option. So in option C, expenses prepaid, so yes, this is the right option. Income owing, this is the right option. Expenses owing, this is the right option. Income received in advance, this is the right option. So yes, C option is the right option. So in this question, following information is available, which at the start of the year we have some trade receivables. This is the balance CD. This is the trade discount which we given to our customer, but it would not record because trade discount would not record into the uh, sale error control account. Cash discount, irrecoverable, it would also record on the credit side. It would also record on the credit side. Um, Increase in allowance, no, it would not record into it. It would record into the provision for bad debts, irrecoverable debt. Cash received from the credit customer, yes, it would record on the credit side. What is the total value of the credit sale? It is very simple. We just need to draw the format. Balance BD would come under the debit side. Okay. And balance CD would come under the credit side, which is 65300. Trade discount would not recorded. Cash discount come under the credit side also. This is a discount, as you can see. Irrecoverable debt, which is 60 to 100, we had to record it as the bad debts. Allowance would not recorded. Cash received from the credit customer during the year. So this cash received, so it means that it would also decrease your sales at a control account your customer. So that is why it would record on the credit side. So we have to find this figure. Just deduct this amount from the credit side, and after that you will get the sales for it. This is very easy. This is the sales, which is 544 double triple zero. Okay, so MCQ 11. Credit customer gave cash to sale as a clerk in part settlement of her debt. Clerk was dishonest and kept the cash for himself, and he entered the receipt in the customer's sales ledger account but made no entry in the cash book. Okay. So in option A, as you can see, that the examiner says that what caused the theft to be discovered, that how this theft discovered. So in option one, examiner says that bank reconciliation statement was prepared. So we know that bank reconciliation statement is kind of a thing which we prepare just to find out the errors which we have done in the cash book, or maybe some errors which bank created. So this is only related to the cash book and the bank statement. So this would not related to it. In option B, sale as a control account reconciliation statement was prepared. Yes, because whenever we are making the sale as a control account, okay. So in sale as a control account, we always prepare the sale as a control account from the prime books. Cash book is also a prime book, but sales journal is also a prime book. So we didn't made any entry in the cash book, but we made the entry in the sales journal. So it means that it must have recorded into the sales journal. So whenever the sale letter control account made, so it means that we will follow the sale letter control account from the prime book. So this theft would be discovered. So in option C, a settlement of account was sent to and checked by the customer. So it cannot be happen because uh, this person entered a receipt in the customer sales ledger account. So we are preparing the sale ledger control account, sale ledger account. Why? Because we want to remind our customer that this amount, which is basically you are owing to us. So that is why we have to prepare its account. We have to prepare its statement of account, and we are sending to it. But because this person has added this receipt in the sale letter control account, so it means that we cannot send this. It means that we will not find out that this amount is basically still this customer is owing us. So that is why it is not the right option. So B seems to, on trial balance, we know that trial balance, because whenever a trial balance is not agreeing, we will open the suspense account. So it means that by doing this, maybe you will not find this theft, but by making the cylinder control account reconciliation statement, so it means that you will check this per prime books, and in prime books you will easily caught this theft by discovering uh the sales in which the sales journal. Okay, so in question number 10, trader's cash book shows the double balance of this at 30 Apple. Bank charges are this, have not been entered into the cash book. Check for 145470 received from a credit customer and a check of this paid to a supplier appear in the cash book but not into the bank statement. What is the bank balance shown on the bank statement? So first of all, we have to address the cash book. So our cash book balance was 12460, and these bank charges um we didn't record. So these are the bank charges, so it should be subtracted from your bank balance, your cash book. So after deducting this, we have 7960. Okay. So after that, we have unpresented check, which is 1740, which a bank didn't record, but because this will reduce our bank balance, so we that is why we are recording it. And unclear checks means that these are the checks which is which you recorded into your cash book, but this is not recorded in the bank statement. So you know the basic formula of this, that why we are adding the unpresented check and deducting the sales unclear checks. So after that, we would have the bank statement, which is 4770 minus. But because the minus is for the bank, but if it is minus, so it is basically the debit balance for the business. Because whatever which is maybe debit for us, it would be credit for the bank. But if an amount is credited by the bank, so it would be debited by us. So this is the change of terminology. Okay. So in question number 9, which the statement describes the benefits of preparing a BRS. Okay. So first of all, of course, the number one is the right option. Why? Because we are checking the accuracy of transaction recorded in the bank statement. We are doing it. Number two is ensure that cash is still agrees with the total of cash column in the cash book. No. We are basically making the BRS because we want to agree the bank statements balance and the cash book balance. This is not the right option. Eliminates the possibility of fraud by the members of staff. So we are not making it because we don't want to deduct the fraud. We will just want to deduct the errors. Option 4 ensures that trial balance and financial statements contain up-to-date figure for cash at bank. Of course, if our cash at bank, we know that it would record in the financial statement uh, as a current asset. So it means that we are making it by because we want that in our trial balance, our cash balance would record with the right amount and of course into the financial statements also. So 1 and 4 is the right option. Company's trial balance includes a suspense account, and it was found that the only errors was discount received is 240 and discount allowed, which is 312, which had been both entered on the incorrect sides. So it means that this discount received should be credit, but we debited by mistake. And this discount allowed 312 should be debit, but we mistakenly credit it. So incorrect sides of the respective ledger accounts. Okay. So what is the double entry required to clear the suspense account? So I am just opening the suspense account here, as you can see. Okay, so what is the double entry required? So basically this discount received should be credit, but it mistakenly debited by us 240. So now it means that we have to credit the discount received, but with the double amount. Because if you are if you mistakenly debit the 240 and now you are crediting the 240, so it will be cancel out. So that is why we have to credit it by the double amount. So in suspense account, discount received is credit and suspense would be debit by the $480. And discount allowed should be debit, but we accidentally mistakenly credit it. So now again, this is again cancel out if we record it on the debit side. So we have to record it on the debit side, but with the double amount. So 312 and 312 will be 624. So here we can see that this suspense account is debit and suspense account is credit and discount allowed account is debit by the 624. So basically the difference would be the 144. So suspense account balance would be 144 because our credit side is heavier. So that is why difference would be come under the credit side in the suspense account. So suspense would be credit by 44, discount allowed 624, debited, and discount received would be credited by the 480. I'm just tired because I have spoken a lot today. Okay, so in question number 7, Business received 100 cash from the credit customer in settlement of a debt. When recording it, an error of commission was made. So we know that if the error of commission made, so it would not affect your trial balance, because in commission both has debit entries. So for example, if we are making the expense, if we have incur some expenses by $2,000, and if we are writing this $2,000 on the asset account, so basically expense also has debit nature, and the asset has also debit nature. So it means that because the trial balance would not agree if its double entry would be break. So it means that commission error would not be affect the trial balance. So which statement about the debit and credit columns of the trial balance is correct? Total of the credit column was 100 higher than the total of the debit column. So it cannot be happen because this is the error, commission error. Total of the debit column was 100 higher than the total of the credit column. This is also again wrong because it would not affect the trial balance. Total of both columns were the same as if the error had not taken place. Yes, this is the same. It is just like and no error had been made in the trial balance because this will not affect the trial balance. So C is the right option. Okay, so in question number 6, a non-current asset of a business cost 300,000 in 2021. It is depreciated using the reducing balance method at the rate of 40%. A full year depreciation is provided in the year of acquisition, but none in the year of sale. The financial year of the business ends on 31st December. In 2023, item was sold for $150,000. Disposal cost was $15,000. What was the profit on disposal? So first of all, we have to find out its the depreciation. So we have purchased this asset in 2021. So in 2021, we have to apply this 40% on its cost. Okay, so the 300,000 was its cost and 40% of it was $120,000. So this is $180,000. And in 2020, again, we have to apply this 40% on the net book value. So net book value is 180,000 and depreciation is 40%. So we have 72,000 depreciation at this time. Again, we want to depreciate our asset in 2022. So the net book value of 180,000 minus 72,000. So we have the net book value, which is 10,000. I think we should, because I have solved this paper maybe I think 15 or 16 days before. So I have to 180,000. Yes, this is the net book value of 10,000. 1,08,000. Okay. So this is the net book value in 2023, but we sell this asset in 2023, and examiner is saying that you should not record any depreciation in the year of sale. So it means that we just need to find out its net book value, not we are not applying the depreciation rate in 2023. So the sale price of the asset was 150,000, and but disposal cost is 15,000. So it means that we have to deduct this disposal cost from its sale price, because it was decreased as sales price, which is 135,000. So the cost of this asset was 1,08,000, but you are receiving only 1,35,000. You are receiving more, 1,08,000 its net book value, but you are receiving 1,35,000. So it means that $27,000 is the profit on disposal. Used motor vehicle was part exchange for a new motor vehicle. Balance of the purchase cost of new motor vehicle settled by the check. What were the entries recorded to the part exchange value? So this is very simple because we are purchasing the new motor vehicle. So it would debited, and because we are purchasing this motor vehicle for the part exchange, so that is why our disposal account would be credited. Question number 4, business purchase a shop and incurred the following cost. Purchase price of the shop, which is 6 lakh 8,000. Legal fees, which you have incurred for purchasing the shop, is 7,200. Cost of initial inventory. So we know this is not the part of your capital expenditure. Cost of installing air conditioning is 47300. Yes, if you are purchasing the shop, so if you're decorating the shop, or maybe if you are installing some air conditioning, so it means that it would also the part of your capital expenditure. So we just need to add these three things. So we have 7345000 would be a total capital expenditure. Okay, so in question number 3, Maria recorded a check for 475 received from Josh, a credit customer. Josh had deducted a 5% cash discount, and the check has now been returned as dishonored. Okay. So okay, so what is the correct entity to record a return of the check? Okay, so firstly, when she received this check, so what he would do basically, 475 she is receiving, so that is why your bank would be debit. Okay, and if 5% cash discount, so I think it would be $25 cash discount allowed. So discount allowed would also debit by $25 because this is the expense for us. And Josh would be credited by 500. Josh is our credit customer. So if credit customer is paying you and you are allowing some discount to him, so it means that your credit customer is decreasing. So that is why it would be credited. But now the check is basically dishonor. So we have to rectify this thing. So basically, previously we decrease our customer by 500, Josh, but now we have to increase Josh by 500 because this 500 we haven't received from him because the check was dishonored. And bank would be again credit because we have to reduce the bank by 475, and we have to reduce the discount allowed by the $25 because the check is dishonored. You got the check bounce back. It means that you didn't get anything from the Josh. Okay, so it's option D is right. One second. This is not the right option. Okay, so which statement describe advantages of maintaining full accounting records? So if we are maintaining the full accounting records, so what are the disadvantages? Advantages. More complete assessment of business performance. Possible, yes, of course. If we are maintaining the full accounting records, so it means that we can better maintain the check and balance on the business performance, that how much profit the business is earning. Bookkeeping costs are minimized. No, it's not like that. Because if you want to maintain the full accounting record, so it means that you have to employ a bookkeeper for this. So it means that bookkeeping cost would not be minimized. And third option, business managers can take more informed decision. Yes, of course. Because business managers would use these financial statements to take the decisions. So yes, this is the right option. In option 4, financial statements will be free from errors and inequalities. No, this is not the right thing, because whether we are creating the full accounting record, but still we have some errors, and that's the reason that we have to make the suspense account. So we cannot say that we don't have any errors in our financial statements. So yes, 1 and 3 is the right option. Which list is a long-term source of additional funds for a limited company? So in option A, bank loan is a long source of financial funds for limited company. Bonus issue of shares is not an additional fund, because this is kind of reward which we are giving to our shareholders. We are not getting anything from it. Debenture issue is kind of a thing. It is additional funds for limited company, but the examiner say that which list is right. So these two options are right, but this option is not right. So that is why we cannot say that option A is right. Option B, bank loan, yes. Leasing our premises, like if we are leasing out one of our building to maybe someone else, so we are um maybe getting the amount, every month for many years, maybe 10 years or maybe more than that. So yes, this is the additional fund and this is a long-term source. Right issue of shares, yes, of course, this is also the long-term source of additional funds. C, bonus issue of shares, no. Leasing of premises, yes. Trade credit, yes, this is the additional fund source, but this is not for the long term. This is for the short term. So this is not the part of your right option. Debenture issue, yes. Right issue, yes. Trade credit, no. So only B option is right, because all three options are right according to this statement. Okay, so we have completed this paper, and maybe after some days, I will try to solve the variant 1 for this paper also, and I will upload it. And one more thing I want to tell you, that if you guys want to take my online classes for accounting and business, so you can WhatsApp me, or you can contact me on my Facebook, or you can text me on wherever you want. You will get the information in the description, that how can you contact me. Or and for now it is, I think, 11:43 p.m. here, and I am just tired and I just need to sleep. Okay, so good night.